2 weeks ago on this channel, we traced how SoftBank had committed more than $60 billion to OpenAI, most of it funded with debt on a company it does not control and cannot easily sell, with $30 billion in obligations coming due before the end of the year. We told you the reckoning had a date on the calendar, SoftBank's August 6th earnings call. That date arrived today. SoftBank reported net profit of 347.3 billion yen, about $2.2 billion, more than double the roughly 166 billion yen analysts expected. On paper, a blowout. Then you look at the line item for the investment everyone was actually watching. OpenAI, and it reads zero. Not a loss, not a gain. Zero. And the stock fell anyway. Today we open the earnings report and find out what actually happened. Before the numbers, the stakes. SoftBank is not a hedge fund making a side bet. It is the single largest outside investor in OpenAI, the company behind ChatGPT, holding a committed stake now reported at $64.6 billion for roughly 13% ownership. If that bet performs, it validates the entire theory that private AI labs are worth trillions. If it strains, it is the clearest test case yet for how much of the AI boom is actually financed with borrowed money rather than cash on hand. SoftBank funded this by selling its entire NVIDIA stake, trimming T-Mobile holdings, and taking on tens of billions in new debt. Every one of those moves was a bet that OpenAI's valuation would keep climbing fast enough to justify the borrowing. Today's earnings are the first real data point on whether that bet is working. Start with the headline because it is genuinely strong. SoftBank's net profit of 347.3 billion yen crushed the roughly 166 billion yen analysts had modeled, even though it was down about 18% from a year earlier. Net asset value, SoftBank's preferred measure of what the whole portfolio is worth, hit a record 72.3 trillion yen as of June 30th. Total investment gains for the quarter came to 1.8 trillion yen, up 1.3 trillion yen from the same quarter last year. Read only the top line, and this looks like exactly the vindication SoftBank's OpenAI bet needed. The company beat expectations by more than double. That is the number every headline ran with this morning. It is also not the number that explains what actually happened inside the portfolio. Here is the number the headlines buried. OpenAI, the position everyone has been watching since our last episode, recorded no gain and no loss for SoftBank this quarter. Flat. That is a meaningful change from previous quarters when rising OpenAI valuation marks were a direct driver of SoftBank's profit. And it happened in the same 3 months that SoftBank actually wired $20 billion of fresh capital into OpenAI, part of its total $64.6 billion commitment with another $10 billion due by October. So the company spent the quarter pouring money into the position and got a valuation mark that moved by exactly nothing. Not because OpenAI collapsed, because SoftBank, like every other investor, is holding a stake in a private company with no quarterly stock price, only a valuation that gets marked when someone decides to mark it. If OpenAI contributed zero, something else made SoftBank's quarter. That something was Intel. SoftBank invested about $2 billion in Intel last year at roughly $23 a share, a modest position by SoftBank's standards, barely a rounding error next to the OpenAI commitment. Intel's stock then surged 216% through the quarter, and that single stake generated approximately 1.3 trillion yen, roughly $8.5 billion in investment gains, the single largest driver of SoftBank's entire beat. Fair value gains on SoftBank's ByteDance holdings added more on top. The irony writes itself. SoftBank sold its entire NVIDIA stake to help fund the OpenAI bet, and the investment that actually bailed out this quarter's earnings was a completely different chipmaker. Nobody was writing headlines about in July. The record 72.3 trillion yen net asset value was a snapshot of June 30th. SoftBank also disclosed a pro forma net asset value as of August 5th, one day before this earnings call, and that number had fallen to 58.3 trillion yen. That is a roughly 14 trillion yen swing, on the order of $95 billion, in about 5 weeks, driven by market volatility hitting the same holdings that produced the record high just weeks earlier. SoftBank's own chief financial officer, Yoshimitsu Goto, put it plainly on the call. The market is focused less on this quarter's beat and more on valuation risk and the scale of future spending still to come. A company can report a record high and a near-record evaporation within the same earnings presentation. SoftBank just did both. That is why SoftBank shares fell as much as 4.4% on a day the company beat profit estimates by more than double. Investors were not grading this quarter's number. They were grading what the OpenAI position's flat valuation and the 5-week NAV swing say about the next several quarters, on top of the roughly 50% decline in SoftBank's stock price since early June, when it briefly became Japan's most valuable company before giving back more than half those gains. Rising credit default swap costs on SoftBank's debt point the same direction, more investors paying to insure against the company defaulting. A profit beat driven by a chipmaker stake a fraction the size of the OpenAI position was never going to erase that math, and the market made that verdict clear within hours of the report. We flagged this 2 weeks ago, and it has not changed. When SoftBank went looking for financing to help cover its AI commitments, banks would not accept the OpenAI stake itself as collateral. That is a private company with no public price and no easy exit. Exactly the kind of asset lenders hate holding if a loan goes bad. SoftBank pledged ARM shares instead, taking on a $20 billion margin loan against a company it does control and can sell if it has to, on top of a $40 billion bridge loan. On today's call, SoftBank reported its loan-to-value ratio at 13%, comfortably under its own 25% policy ceiling, and pointed to 2.3 trillion yen in cash and a manageable bond redemption schedule as evidence the debt load is under control. The reassurance is real. So is the fact that the OpenAI stake still cannot stand on its own as loan collateral 10 months into this bet. Zoom out, and today's earnings call is bigger than one company's quarter. SoftBank is the loudest, most leveraged version of a bet. Thousands of investors are making in smaller ways. That private AI valuations, OpenAI's, Anthropic's, every unlisted AI labs are worth marking up aggressively because the technology is real and the growth is real. OpenAI's own executives told SoftBank its annualized revenue is now running near $12 billion, more than double where it stood in December of last year. A genuinely strong number. But strong revenue growth and a flat quarterly valuation mark can both be true at once. And today's earnings are proof that even the company with the biggest, most public conviction on this bet cannot make a private valuation move just by wanting it to. This also is not new territory for Masayoshi Son. He has run this exact playbook before, on Vision Fund's WeWork write-down, on the dot-com era Yahoo Japan and Alibaba bets that both split investors just like this one. Some calling him a visionary, others calling the leverage reckless, years before either verdict was actually settled. Son's answer to that pattern has never changed either. Keep building 5 major AI data center projects now underway across France, Ohio, Texas, and Japan, over 35 gigawatts of planned capacity. Because in his framing, the risk of moving too slowly on computing power outweighs the risk of moving too fast on debt. Today's earnings do not resolve which version of Son turns out to be right. They just add the clearest data point yet to a bet that will keep getting graded one quarter at a time. So here is Thursday's earnings day in one sentence. SoftBank's $64.6 billion, most watched, most debated investment in the company made exactly $0 of difference to this quarter's profit, and the beat came instead from a $2 billion stake in a chipmaker almost nobody was covering in July. That gap between where the attention goes and where the money actually moves is worth remembering every time a headline number gets reported as if it tells the whole story. SoftBank's AI bet is not proven right by today's numbers. It is not proven wrong either. It is simply still open, still leveraged, and still due for its next $10 billion payment by October. Subscribe now, because tomorrow on The Stack we trace the cables under the ocean that the entire internet, AI included, actually depends on.